Hello and welcome to our live webinar discussing effective tools for sustainable development in the CIS countries and Turkey for the Islamic finance and sukuk markets. This webinar is jointly brought to you by S&P Global Ratings and the ICD, the Islamic Corporation for the Development of the Private Sector, in collaboration with the Islamic Development Group Business Forum. My name is Yelena Yeliseyinka. I'm head of S&P Global Ratings in Russia, CIS, and Central and Eastern Europe, and I will be your host for today. Joining us today, we have a great lineup of leading industry experts in the Islamic finance sector, who will be providing us their expertise and insights from across the Islamic finance and sukuk markets. Before we start, here are some important notes. This live webinar is delivered via Zoom and comes with video, audio, and accompanying presentation slides. Please note that only the speakers can share the video and audio. Our webinar today features real-time Q&A. If you have joined us via Zoom, send us your questions via the Q&A tab located at the bottom of your screen, both in English and Russian. If you are watching this webinar via YouTube, send us your questions via the live chat box located in the right-hand side of your screen. Additionally, if you have joined us via Zoom, simultaneous translation into Russian is available. Click on the interpretation button at the bottom of your screen and select Russian in order to hear this webinar in Russian. Unfortunately, translation to Russian is not available for those watching us via YouTube. Finally, please excuse any unforeseeable technical disruptions that might occur during this live event. Some of our speakers are participating in this webinar remotely due to the current situation. So if you face any technical issues, please let us know via Q&A chat. Well, before we hear from our speakers today, allow me to briefly set the scene. As you know, during the pandemic time, Islamic finance has been growing. Pre-pandemic time, Islamic finance has been growing rapidly. Despite a relatively small share in the global financial system, the sector has shown a double-digit growth year on year. The industry continued to grow last year despite the COVID-19 pandemic, although at a lower pace than in 2019, with global Islamic assets expanding by 10.6%. In 2020, against growth of 17.3% the previous year. In our May report, S&P says that 2.2 trillion global Islamic finance industry, and accordingly in accordance with the date by Global Islamic Finance Report, this figure may add another trillion by 2024. So the sector is expected to grow from 10% to 12% over 2021-22 due to increased Islamic bond issuance and a modest economic recovery in the main Islamic finance markets. It is noteworthy that not only traditional Muslim countries get interested in investigating the opportunities in the sector. It is worth mentioning that at today's event, we have attendees from 63 countries, out of which several, like for example, Saudi Arabia, Malaysia, and Pakistan, are regular issuers of Islamic instruments, but many are just starting their journey in the new sector. Islamic finance that bans interest payments and pure monetary speculation has been in the rise for many years across markets in Africa, the Middle East, and Southeast Asia. At our conference today, we're aiming to bring the Islamic finance insights to the other regions. One of the topics for discussion will be prospects for Islamic finance in the CIS and Turkey, which is, well, CIS is new to the sector, and Turkey is already playing a noticeable role there. It remains a fragmented industry, though, with uneven implementation of its rules. But over the next 12 months, we at S&P could see progress on a unified global legal and regulatory framework for Islamic finance. We believe that such a framework could help resolve the lack of standardization and harmonization that the Islamic finance industry has faced in decades. S&P has long been a rating agency that took a great interest in the Islamic finance sector and has great specialists and deep knowledge of the sector. In the recent years, S&P Global Ratings has several times been awarded as the best rating agency in the sector. We have been awarded with the Islamic Finance Championship Award in 2018, 19, and 20 as Global Islamic Finance Agency. We also got a prize as Best Rating Agency in the Islamic finance world by Islamic Finance News. And this is great achievement. So I'm anticipating today a great, insightful conference, really interesting theme to touch upon, a lot of topics to cover, amazing panels of speakers, and a lot of questions to ask, I'm sure. So I hereby invite you to listen actively, constructively work on this conference, and let's have a lively exchange of opinions. And with this, I'd like to hand over to Ayman Sajini, Chief Executive Officer of the Islamic Corporation for the Development of the Private Sector, to say a few words. Ayman, over to you.
Thank you very much. I'd like to say good morning, good afternoon, good evening to all of you that are participating. Bismillah ar-Rahman ar-Rahim, wa salatu wa-salamu ala Sayyidina Muhammad. Assalamu alaikum wa rahmatullahi wa barakatuh. I'm happy to speak to all of you today and welcome today Islamic Financial Webinar on effective tools for the sustainable development in CIS countries in Turkey. As you know, ICD is a multilateral development financial institution and is part of the Islamic Development Bank IDB group. ICD has an authorized capital of $4 billion. Currently, the shareholders of ICD are ISDB and 55 member countries and 5 public financial institutions. Ladies and gentlemen, the current COVID-19 pandemic has sent shocking waves around the world, both humanitarian and economic. This results in government having to reevaluate their entire economic and redirect spending towards emergency stimulus packages to battle unemployment, business bankruptcy, and dangerous drop in GDP. As such, the future of Islamic financial growth in the CIS region largely depends on attracting foreign direct investment as well as developing a regulator framework for ethical financing. In the Islamic sphere, there are numerous instruments that align unequally perfectly with social and sustainable objectives, and these are gradually being recognized and brought increasingly to the fore state commitment to the national plans for sustainable development. And sovereign signals are starting to provide some guidance, but there is capacity to building a gap that needs to be addressed. We believe that silent and features and benefit of Islamic finance can be effectively developed to promote financial inclusions and social impact in CIS countries. Nonetheless, there is more work to be done with regards to financial inclusions and social impact in the region. Financial inclusion and social impacts are utmost important to the IDB group. The IDB has allocated $80.3 million for implementation of social projects in the country, while it channeled $20 million in loans to Kyrgyzstan to enhance water supply and sanitation. Also in 2017, the ICD extended over $39 million to 5 Uzbekistan entities to finance small and medium-sized businesses, a market segment that accounts for over half of the country's GDP and employs over 2/3 of the national working population. Distinguished guests, I'd like to point out that Islamic finance is expected to play a role in recovery of the regional economic, in particular the virtual SMEs sector. SMEs are one of the most powerful engines of the CIS countries' economy and one of the strongest driven of economic development, innovation, and employment. Therefore, we believe multilateral development banks have a role to play to expand SME access to funding. For instance, IDB Group is a strong financial supporter of SME sector. Financing are often provided by the IDB itself or one of its different arms, especially the ICD. The ICD extends 2 million line of finance to Uzbekistan joint stock commercial banks, investment financing bank, and trust banks. The funds were utilized to foster private sector development, especially in SME sector. In addition, ISDB extended $40 million financing to Kazakhstan Damo Entrepreneurship Development Fund to develop Islamic finance SMEs. Ladies and gentlemen, since last year, ICD became one of the fastest Sharia fixed income joint arranger, holding the 8th position on Bloomberg International Sukuk Issuance League table at the end of 2020. ICD has pioneered a development role in the emerging and fund market over the past few years. Despite the regulatory change, ICD has assisted many sovereign with their debt sukuk issuance. ICD has strong placement and distribution capacity and capability, co-arranging 8 international sukuk for GCC-based issuers in 2020 and debt sukuk for the Maldives in 2021. ICD has a strong track record in issuing debt sukuk for its member countries. ICD developed its international sukuk advisory capacity as a result of increasing demand for member countries that are planning to fund their infrastructure through debt capital market. Up until now, ICD has closed 9 sovereign sukuk issuance. We also expect to see more interest from CIS country government toward local currency sukuk as they aim to attract cheap financial in international capital market. ICD believes the region will continue to develop the Islamic financing industry in order to create alternative sources of financing for SMEs and state and municipality infrastructure projects. There is need to have support of the political leadership in order to expedite the process of adopting a regulatory framework related to Islamic finance. While the Islamic finance industry within the CIS countries region has been developed officially for more than 10 years, the key milestone came in 2009 when the president of Kazakhstan signed the package of legislative changes related to Islamic finance. Key jurisdictions would need to consider adopting special measures to make Islamic finance organizations operate on an equal footing with conventional banks. Also, the legislation on tax would need to be adopted to the necessary changes in respect of the application of value-added taxes, VAT, on sale and purchase transaction of assets by Islamic financial institutions, to avoid of double taxation in leasing operation, and other adjustments to equalize the taxation level of conventional and Islamic financial institutions. Therefore, certain steps are needed desperately to eliminate taxation barriers in Islamic finance transaction in the region in order to mark and make Islamic financial competitive with conventional finance. While Islamic finance progresses is slow, one way to argue that it is too complex to understand and to be used by the general population. Hence, stakeholders in the CIS region need to address the lack of awareness and understanding of Islamic products, both by the banking industry and in general by the public. Distinguished guests, to help drive the development of sukuk market in the CIS region, ICD is eyeing Kazakhstan to host its debt offering this year. The issuance will be in local currency and SME sector will be the key beneficiary of such landmark trade. The ICD is driving by the conviction that Sukuk is appealing to member countries because it offers an alternative source of capital and diversified the country investment base. The ICD is also considering being an anchor investor to facilitate access by blue chip companies in the CIS region to local and international capital markets. By the end, I'd like to thank you, each of you, for attending this webinar. I look forward to hearing you experiencing and views and learning about new ideas related to the development of Sukuk market. Now, without further ads, I will now hand over to you, Elena. Thank you very much.
Thank you very much, Ayman. We're now going to move to our first session, and I would like to welcome our speakers. With great pleasure, I'm presenting to you my colleague, Mohammed Damag, Global Head of Islamic Finance at S&P Global Ratings, Mr. Tariq Malaika, Lead Principal Sukuk Advisory, Global Markets and Fixed Income in the Islamic Corporation for the Development of the Private Sector, and the session's moderator, Mr. Samir Tagiev, Head of the CIS and Europe, RMPD at the Islamic Corporation for the Development of the Private Sector. I shall now hand it over to Samir to kick off this first session. Samir, over to you.
Thank you, Elena. Good morning, all online participants. Good afternoon from different time zones. I'm very pleased to moderate the first session with two esteemed speakers. Our first speaker will be Dr. Mohammed Damag. He's a Senior Director for Financial Services at S&P. He covers financial institutions in the Middle East and Africa region. Mohammed is also a Global Head for Islamic Finance within S&P Global and leading a global team of Islamic specialist analysts at S&P. Before joining S&P, Mr. Mohammed worked as a Principal Credit Risk Officer for African Development Bank in Tunis from 2006 to 2010. He worked for S&P Global Ratings, covering conventional and Islamic financial institutions in Middle East and North Africa region. Mr. Mohammed holds a PhD degree from University of Paris too, and also master's degree in financial institution management from École Supérieure de Commerce de Tunis. Mr. Mohammed, welcome to our session. Our second speaker is Mr. Tariq Malaika. Mr. Tariq Malaika, based in Jeddah, he's a lead principal at Sukuk team in ICD. Mr. Tariq has over 17 years of professional experience in investment banking and advisory. Before joining ICD, Mr. Tariq was a senior analyst at Samba Capital. He has advised companies in diverse sectors, including insurance, healthcare, financial, communication industries. Mr. Tariq also assisted overseeing the full cycle of deal-related activities post ECM and DCM transactions. He's a founding member of HSBC Saudi Arabia, where he gained comprehensive exposure to the flotation management process. Mr. Tariq holds MBA degree from IE Business School, Madrid, and also Bachelor of Science in Business Administration from California State University from the United States. Mr. Tariq, welcome to our first session. Before I go to give floor to Mr. Mohammed Damag, I just want to inform all our online participants. Currently, we have more than 200 participants. When you give question to our speaker, please mention the name of our speaker in order for me to formulate the question directly to speaker. So with that, I would like to kindly ask team to display the video before Dr. Damag speaks about S&P.
It all started over 150 years ago with Henry Varnum Poor's Investor's Guide to the Railroad Industry. Today, with ratings issued on more than 130 countries and over 1 million ratings outstanding, S&P Global Ratings continues to evolve and lead the way. Our network has grown to over 1,500 ratings analysts in more than 28 countries who leverage artificial intelligence to provide a sharp focus on factors that impact creditworthiness and generate essential insights in real time. Our innovative analysis now incorporates augmented intelligence to deliver highly specific portfolio and securitization insights that include market events as they happen. Fueled by unparalleled data and a unique holistic view of capital markets, our leading-edge credit analytics identify when and how environmental, social, and governance factors will impact a rating. With more than 150 years of experience in innovation, S&P Global Ratings has continuously evolved to provide groundbreaking essential intelligence to help your decisions take shape.
All right, excellent. Thank you very much, Samir. Good morning to all of you and good afternoon. For the next 7 to 9 minutes, I will share with you our view on the current and prospective performance of the Islamic finance industry, and then spend a bit of time to talk about the topics that are likely to be at the forefront in 2021. Next slide, please. I would hopefully not surprise you when I say that COVID-19 and the drop in oil price represented the perfect shock for the Islamic finance industry. Next slide. As you can see, the industry remains concentrated in oil exporting countries, GCC and Malaysia primarily, and these have been severely impacted by the COVID-19 pandemic and the drop in oil price. This year, by the way, for those of you familiar with our publication, we decided to exclude Iran from the calculation of the total assets of the industry because of the extreme volatility of its currency. And as you can see here, the total assets of the industry reached $2.2 trillion and was up 10.6% in 2020 versus 17.3% in 2019, when the growth was supported by strong issuance of sukuk. Now, in 2020, we saw lower growth in the sukuk market and in some Islamic core countries' banking system. And as we project a mild recovery in 2021, we think that the industry will continue to expand by around 10 to 12%. Next slide. A few reasons explain our expectations. First, the economic recovery will be lower than what we have observed historically for most of the countries. For the GCC, for example, we don't expect most of the countries to go back to 2019 nominal GDP before 2023. Second reason, we expect strong financing growth in Saudi Arabia, thanks to the mortgages, but also to corporate lending as the country implements its Vision 2030. In Qatar, we see some opportunities related to the World Cup. And in the UAE, we think that the Dubai Expo will create some dynamic and will trigger some lending growth this year. In Turkey and in Malaysia, we think that growth will continue, although in Turkey, we expect the growth to be lower than what we have observed in 2020. Now, for the sukuk, we expect the total amount of issuance to reach something around 140 to 155 billion in 2020 versus almost 140 in 2020. And I will come back to the reasons in a minute. And last but not least, for the fund and the takaful industry, we continue to see the takaful sector expanding by 5 to 10%, while in the fund industry, we might see some of the growth as the investors are actively chasing yield. Now, the main downside for the industry in 2021 would be the evolution of the pandemic, the vaccine rollout, and its potential impact on the oil price. Next slide, please. If we turn back to the sukuk market, we saw some numbers out there pointing to an increase in the volume of issuance in 2020, but based on our methodology, we believe that the volume of issuance has dropped by 16%. And the drop was uneven because we saw some of the GCC government and some of the central banks reducing their pace of issuance. But in the first quarter of 2021 versus 2020, we saw an increase of 1.4% compared with the same quarter last year, and 22.9% if you focus only on primary issuances. Next slide. And why we expect higher volume in 2021? I think some sovereigns will be back to the Sukuk market more aggressively after going to the conventional in 2020. We think that also some of the corporates will come back in 2021 to execute some of the deferred capex. Remember, in 2020, most of the corporates have decided to scale back their capex, preserve cash in order to see how the pandemic will evolve. We think some of this capex will be executed in 2021 and will require financing. Refinancing with 65 billion of Sukuk maturing in 2021. Part of them will be refinanced on the market. And finally, good liquidity in the market for now. And as such, we think that the overall volume of issuance will be around 140 to 155. And again, the downside risk here, apart from the general downside risk related to the pandemic, would be linked to the adoption of the AOFE standard. And if the issue is not resolved for those countries that are under the AOFE standard, specifically standard 59. And the second downside would be a sudden change in the global liquidity picture. Next slide, please. Now, what to look for in 2021? Next slide. The first thing to look for is the eternal debate on standardization, which is starting to impact some of the issuers in the UAE with the compliance of standard 59 of the AOFE and its impact on the hybrid structure, creating residual exposure to asset risk, liquidity risk for some of the issuers. Now, if anything, this shows that there is a critical need to have a strong look at the existing standard, and that the process has to be inclusive to take into consideration everything, or to take into consideration all the requirements of the stakeholders. The other news here is that the Dubai is planning to come up with a unified global legal and regulatory framework on Islamic finance. Now, depending on the form of this regulatory framework, depending on its adoption, this could bring a solution to the standardization issue that the industry has been facing for many decades. Next slide. We also foresee more defaults in 2021 because of the recession of 2020. And here, sectors under stress would be the airlines, real estate developers, the hospitality sectors. And frankly speaking, we already saw some of it happening last year with, for example, Garuda Indonesia extending its Sukuk last year. And ultimately, while default is never a good news for the investors, it will test the robustness of the legal documents used for issuing Sukuk. And also, it will test the legal environment for insolvency that has been implemented or revised in some of the GCC countries over the last few years. Next slide. The other interesting trend to look at in 2021 would be the green and social instrument. And I guess here the opportunity is no longer to be demonstrated. I think the parallel between the ultimate goal of Sharia and the ESG factors is no longer to be demonstrated. But overall, we expect the contribution to remain low, because these instruments are more complex than normal Sukuk, which are themselves more complex than normal conventional bonds. Next slide, please. On the fintech and digitalization, I think the story here is that during the pandemic, their importance was demonstrated through the capacity of banks and issuers to switch their business online at fairly short amount of time and without major disruption. And I think the next big thing for the fintech adoption in the industry would be the application of the blockchain technology to Sukuk issuance, which could make the process stronger and smoother, stronger in resolving the challenges related to traceability of assets, cash flow, and investors, smoother because the exercise of issuing the Sukuk will become just logging into a platform, selecting legal document, plugging the asset, and going and hit the market. Next slide, please. So to summarize, 10 to 12% industry growth. There are opportunities related to standardization and the increase of the contribution of the sustainable finance to the growth of the industry. And last but not least, the coordination between the different stakeholders, which is important in order to ensure a more integrated growth of the industry. Back to you, Samir.
Thank you, Dr. Mohammed. It was indeed a very enhanced presentation and information. For new participants, online participants, I just want to tell you to all that this session is not only for CIS and Turkey, it is for all our member countries working in global scale. Also, I would like to remind all our participants that there is a Q&A and chat boxes, so you can give your questions. I'm only asking to address the question to our speaker in order for me to define to which speaker you address the question. Before I give floor to Mr. Tariq Malaika, I will ask my colleagues to play a video on ICD achievements. Thank you.
What does a business need to succeed? It needs strong leadership, clear goals, industry expertise, and financial stability. Together, these elements can contribute to your business's success, growth, prosperity, and longevity. With a heritage of helping businesses to thrive, ICD can support you. As part of the Islamic Development Bank Group, ICD provides access to finance. We've spent more than 20 years powering positive economic transformation across our member countries. Our vision is for sustained economic and social growth and prosperity across all of our member countries. And we support that vision by offering financial security, long-lasting partnership, deep expertise, and complete trust, so we can develop your projects and your expertise. Through our diverse range of Islamic finance products, such as line of finance, term and equity finance, your business will enjoy new opportunities. You can receive funding for existing and new projects, gain access to technical expertise and valuable training, and contribute meaningfully to your sustainable development goals by creating new jobs. Our support even extends beyond finance, with advisory services, debt capital market development, Sukuk issuance support, and expert guidance. Plus, our online platform, The Bridge, opens new horizons to our network and connects financial institutions who are ready to do business beyond their borders. Whatever eligible sector you work in, we can help you build a strong foundation on which to grow, so you can move forward to achieve your ambitions.
Yes, good morning, good afternoon to everyone. Thank you, Samir, for the introduction. Today I have a short presentation. I'll go through just an overview of the global Islamic finance market, talk about some recent developments in the Sukuk market, talk about some trends in the Sukuk market, and then the importance of Sukuk rating and the process of getting the ratings. So one of the few positive trends to emerge from the coronavirus crisis has been the shift in both interest in and appetite for sustainable financing. This may be one of the reasons why we have seen a growth in the green and sustainable Sukuk market. Other forms of environmentally friendly social and green financing tools are also emerging, as the industry and the world are looking for ways to combat climate change and poverty. Even though sustainable Islamic finance is growing, it is still in its infancy, with a huge potential for growth in the long term. The most recent sustainable Sukuk was from Malaysia, issued last April. The world's first US dollar-denominated sustainable Sukuk issuance by a sovereign, with proceeds to be used for eligible social and green projects aligned with Sustainable Development Goals agenda of the United Nations. It's also important to mention that in 2018, the government of Indonesia issued their first green Sukuk. So basically, the Southeast Asian sovereigns are really leading the way in this industry. These days, we are seeing Islamic finance play a role in alleviating the hardships of the global coronavirus pandemic, as well as striving to achieve the UN's Sustainable Development Goals. Sovereigns, corporates and financial institutions are looking to Islamic finance instruments to achieve this, ranging from sukuk to environment, social, and corporate governance-linked loans. Corporate engagement on environmental and social matters is now being prioritized. Sustainable Islamic finance started with financing social programs such as vaccinations and housing. It has now started to broaden its scope and its geographical reach. Specific social instruments in Islamic finance that can be used to help affected economies and populations, such as Qard Hasan, Zakah, Waqf, and social sukuk, are now growing in profile and popularity as governments are trying to finance their way out of COVID-19. Islamic cross-border financing has seen growing activity from Islamic banks over the past 12 months. In Islamic cross-border financing, the lack of harmonization and standards and legislations is one of the challenges faced in the segment. Next slide, please. Global sukuk issuances are expected to accelerate in 2021 following a resilient 2020. Issuers are looking to refinance maturing debt and fund large budget needs. Economic recovery and high oil prices could result in a lower financing needs for sovereigns. An increase in one-off and infrequent issuances might support 2021 volumes going forward. Issuance from financial institutions and corporates is also set to increase as they face challenging business conditions and take advantage of lower funding costs. The sukuk market is also affected by emerging markets and global trends, including the impact of rising US Treasury yields on fixed income markets. Total global outstanding sukuk reached 715 billion end of Q1 2021, 3% higher than the last quarter of 2020. This year, the Islamic Development Bank has issued its first secured overnight financing rate linked sukuk facility, or SOFR linked sukuk facility, in the global capital market, and the first in the Islamic capital market. This SOFR, the SOFR is set to replace the LIBOR, London Interbank Offered Rate, which will be discontinued by June 2023. The debut SOFR linked issuance is a floating rate note worth 400 million carrying a three-year tenor, and was priced at par with mutually agreed coupon payable on a quarterly basis. Linking the sukuk to the SOFR is a vote of confidence from the bank for what is considered the new global benchmark. With the extension of the deadline for the main US dollar LIBOR benchmark, transition risk for floating rate sukuk will be reduced, giving an extra 18 months to incorporate fallback language and allow more sukuk to mature. However, 92% of US dollar sukuk are fixed rate and unaffected by the transition. Next slide, please. Supported by more optimistic borrowers and excess of liquidity by investors, many issuers have closed many TAP issuances. A TAP issuance is a procedure that allows borrowers to sell sukuk from past issuers. The sukuk are issued at their original face value, maturity, and coupon rate, but are sold at the current market price. For instance, the government of Maldives sold 100 million in Islamic bonds in reopening of a transaction the state did last March, when it raised 200 million USD in its debut sukuk issuance. ICD acted as the global coordinator and lead arranger for both transactions. The sukuk market went through a transition period in the beginning of the year, Q1, as issuers, investors, and arrangers sought clarity regarding the recent regulatory changes in the UAE, including a UFI standard 59 implementation, which Dr. Muhammad mentioned in his presentation. With additional disillusion triggers in the new international sukuk documentation, including tangibility, delisting events, and new put options, such triggers may in the future affect the liquidity, credit profile, and rating of many non-sovereign issuers. There is an opportunity for issuers to expand existing investor base by issuing green and sustainable sukuk. While Islamic bonds still only make up a small part of the green sukuk, green bond industry, the sector is growing fast, and the number of high-profile deals over the past couple of months have really cast a spotlight on it. The integration of environmental, social, and governance considerations into investing mandates is expected to drive the development of green and social responsible investing sukuk offerings. Much work would be needed in order to encourage issuers to implement sustainable financing guidelines. Such guidelines will provide clarity to issuers on criteria such as project eligibility, internal green policies, a proper framework of governance, use of proceeds that would qualify as green projects, and reporting on the use of proceeds. Next slide, please. As of June 2020, green sukuk accounted for less than 3% of global Moody's Investor Service cross-sector sukuk issuances. The volume of outstanding Fitch-rated green and sustainable sukuk have increased by 31% in Q1 of 21, reaching around 11 billion. Despite the modest growth, the green and sustainable sukuk market is still in its infancy and is not likely to become a sizable part of the sukuk market in the short term. Green sukuk are structured the same way as regular Islamic bonds. However, proceeds are exclusively used to finance projects with environmental benefits. They have the same regulatory status as equivalent non-green sukuk and can be typically issued through standard prospectuses or base prospectuses. There is no statutory definition of or what qualifies as green sukuk, so the market is basically self-regulated. In order to promote integrity and credibility in the green sukuk market and provide investors with market confidence that proceeds are applied appropriately, the issuers follow the green bond principles set by the International Capital Market Association. A number of rating agencies, financial institutions, and stock exchanges have created indices that are dedicated to green bond segment and sukuk can be listed under them. Next slide, please. Global sukuk are easily analyzed by international and regional rating agencies, which facilitate their marketability. Rated instruments have a multitude of benefits, such as promoting price discovery and improving market transparency. Ultimately, rating provides investors guidance and issuers creditworthiness. So the main important thing of rating is it provides a detailed picture of the issuer from an independent source. So it gives comfort to investors and the investors can kind of price the instrument accordingly. Next slide, please. I didn't want to go into too much detail on the rating process as we have experts with us today, but I just wanted to give a kind of an overview picture of how long it takes. It usually takes somewhere between 6 to 4 weeks to get the process done. Once a mandate is signed, the analysts start looking over the information of the corporate, and then they present that to the rating committee. Then there's a notification of the rating, and then the rating is published. Next slide. Yeah, thank you, Samir.
Thank you, Tariq. Thank you, Tariq. You were, both of you were on time, so I would like to thank you for time that you control. With that, I would like to go to our next session, which is our Q&A session. But before this, Yelena, do you have something? Do you want to add something before we go to our?
No, Samir, thank you very much. Just also for me, I'd like to thank you, Mohammed and Tariq, for sharing great insights. And again, thank you very much for staying on time. So over to you with the Q&A.
Thank you very much. We got more than 23 questions, and I want to thank to our online participants for addressing the question to the right speaker, so it's make my life very easy. So I would like to start with first question to address to Dr. Mohammed Damak. How would Sukuk typically perform in an environment of potential interest rate hikes, United States or potential other markets at some point?
Right, thanks. That's a very good question. Actually, I have to say that our base case scenario is that rates will remain low for a long period of time and that liquidity will remain supportive, especially for those issuers with good creditworthiness. Now, if rates were to increase for any unexpected reason, obviously the liquidity will be much lower on the global capital market, and that would push investors to become more selective when it comes to the creditworthiness of the transaction in which they invest. And for the issuers, the cost will be much higher compared with the situation today. And that's why, if you look at what happened in 2020, one of the reasons why the drop in the volume of the Sukuk market was not much bigger than what we originally expected at the beginning of the pandemic is that we saw a lot of banks coming to the market with the AT1 instruments, the tier 2 type of instruments that were priced in an extremely competitive way. So they went for these instruments because they allowed them to biff their capital base and to biff their capital ratio. And at the same time, because of the lower rate, the pricing was extremely competitive. Now, if rates were to increase, then liquidity will drop and it will be much more complicated for issuers to tap the market and much more expensive. Back to you, Samir.
Thank you, Dr. Mohammed. Question for Mr. Tariq. Okay. Questions are coming, so it goes down. So can a non-CIS country benefit from Islamic finance and Sukuk products? Question for Tariq.
I mean, yes, most definitely. I mean, if you look at a lot of Sukuk issuers, they're not necessarily like Islamic finance hubs. You have issuers that want to tap into that new investor base, kind of targeting the Middle East capital and the Far East Asian capital. So as long as the environment, the legal environment and regulations within those countries are friendly to Sukuk issuance, yes, they can take advantage of it.
Thank you. Next question to Dr. Damak. In case Sukuk bond requires additional Sharia compliance opinion on structure of the transaction before it is issued, can S&P have such authority granted by some Islamic finance regulator to offer such a service? If it works, then rating agency can solve the matter. First, issuer's credibility, and second, compliance with Sharia rules.
Right. Yeah, thank you. Now let me clarify. We do not structure transaction. We do not opine on Sharia compliance. What we do is we opine on the creditworthiness of issuers and instrument by applying our criteria, which are all publicly available. So if tomorrow a government would want to go for a Sukuk, we would first rate the government, and then we would look at the Sukuk legal documentation in order to apply our criteria and to check whether or not all the conditions of the Sukuk criteria are met. But with regard to creditworthiness, with regards to compliance with Sharia, I think this is rather the input of the Sharia scholars and the Sharia boards in order to assess whether a transaction is Sharia compliant or not.
And just to jump in with what Dr. Mohammed just said, this is a place where ICD could also step in, and we use our Sharia board to get the fatwa on the transaction. So if, let's say, in the country there is no Islamic bank or Sharia board, we could do that for them. We structure the transaction, and we get the fatwa from our Sharia board.
Thank you for both of you for that you are jumping and helping each other in answering. Question for Tariq: is the ICD working on any new sovereign issuances? I understand that ICD is looking to issue in Kazakhstan. Can you go into details?
Yeah, sure. I mean, I can't mention too many countries by name, but in the CIS region there is big demand. We've been approached by a few of our member countries there. We've even, as far as 2 years back, signed a few mandates. Usually, the first issuance, sometimes when it's a new country, takes time. For example, when we did our first West African sukuk, it took us almost 4 years to get it across the finish line. So yes, we are looking at the region strongly, not only on a sovereign level, but also in a corporate level. We've had a lot of interest from corporates to tap into the international markets. And to go back on ICD issuing a local currency sukuk, yes, we are, as Mr. Ayman mentioned in his opening speech, that we are actively doing this. We are in the final stages. So what we would be doing is we would be raising local currency to support our line of finance businesses in Kazakhstan. In local currency, obviously.
Thank you. I have two more questions. One for Dr. Damak and one for Tariq. I will start with Dr. Damak. What do you foresee numerically for sustainable sukuk financing in 2021?
Right. I think the contribution will probably be less than 5 to 10% of the total volume of issuance. This is not to say that the opportunities are not there. The opportunities are there, and they are great. I mean, there's a parallel between the core principle of Islamic finance and the ESG factors and ESG consideration. Islamic finance is concentrated in countries where energy transition is a big part of the strategy of the government for the future. But the implementation of energy transition strategy is taking time, number one. And number two, the issuance of such sukuk, the green sukuk or the social sukuk, is much more complex than the issuance of a normal sukuk, which is itself much more complex than the issuance of a bond. So for those issuers who are brave enough to go through the process, it takes a bit of time and it is a bit complex. But overall, we think that in the future, ESG consideration will open new opportunities for the Islamic finance industry.
And if I could jump in once again, if you don't mind. I mean, same thing as Dr. Muhammad mentioned, in our member countries, a lot of our member countries are in Africa, and, renewable energy is the way to go, and we're trying to promote that. However, as he said, adding that extra layer of complexity just scares them off even more, right? And plus it has an additional cost, a bit of cost to the issuance. So some of our member countries who are very cost sensitive, just a little bit more fees towards the issuance might put them off. So usually what we say is, okay, let's do a regular kind of sukuk issuance. Once you're comfortable with that and maybe do a few issuances, then you put in the framework for the green sustainable framework, and then issue under it. So get them comfortable with the first stage and then do the second stage.
Thank you, Tariq. But as I promised, I have one question for you also. So it goes to you. Hi, Mr. Tariq. This question from one of CIS countries, Minister of Finance, from Minister of Finance of one of the CIS countries. He says, how investors' appetite will be for local currency denominated green sukuk, and will ICD be involved in balance sheet exposure? It means to be one of the investors for local currency denominated green sukuk in his country.
Well, you see, I don't think many investors or international investors would be willing to take the FX risk on a local currency sukuk. ICD also shies away from that. You know, even if we issue in local currency, using those proceeds to invest in another sukuk might, you know, cause you know, some risk on that side too. So local currency is I think not in our appetite. However, you might be able to find appetite regionally within the CIS region.
Thank you. Thank you. I want to thank both of you for the great session, and I want to thank, first of all, to our online participants for great questions. Again, both ICT and SMP is reachable. We are institutions which is online. We have our in social media. We are online so you can reach, you can send your questions to us and to me, to Tariq, to Dr. Mohammed. We will be happy to answer. With this, I'm gonna close the first session, and I'm gonna give floor to Yelena to continue with our second session. Thank you very much. Have a nice day.
Thank you very much again, Samir, for holding this session, for being the host. Thank you very much, Mohammed and Tariq. So we shall now move to our exciting next panel discussion with the leading industry experts, where they will discuss the opportunities and challenges for Islamic finance activity in the CIS and Turkey. Again, as a reminder, please send us your questions anytime via Q&A box in Zoom or in live chat in YouTube. So without further ado, I'm pleased to welcome to our next session, Mr. Tariq Malaika, Mr. Alibek Nurbekov, Head of Islamic Finance and Business Hub at Astana International Financial Center, Dr. Mohammed Demak. Thank you very much, both Tariq and Mohammed, for agreeing to participate in the second panel as well. Mr. Roman Rybalkin, Associate Director of Financial Institutions at S&P Global Ratings, and the panel moderator, Mr. Boris Kopeikin, Senior Director, Sovereigns and Financial Institutions at S&P Global Ratings. Boris, over to you.
Hello, Yelena, and welcome to all the conference participants and our esteemed panel speakers. Before we start, because we've got many questions on that in the chat already, I understand that the slides that were presented during the first session and the slides that will be presented further on, as well as the recording of the session, will be available for your reference. Don't worry, if you missed any detail, everything will be provided if you registered and provided your email address. So, moving to challenges and opportunities in the region. Mohammed, maybe if we could start with the market where we see most activity for the time being, Turkey. What is happening now and what we expect?
Thank you, Boris. I think Turkey is an interesting market for Islamic finance. There was and there is still a lot of support from the authorities for the development of the sector, and that helped the sector increasing its market share to about 7% from 5% in 2015. Now, the assets of the industry in Turkey have been multiplied by 3.7 times over the same period, and the Participation Banks Association, by the way, Islamic banks in Turkey are called participation banks. The Participation Banks Association expects the market share to continue to expand to 15% by 2025, which means assets increasing again by almost 3 times. Now, we think that this objective will be a bit challenging to achieve. For the time being, the public sector participation banks account for around 30% of the sector, but we think that the contribution will increase over time because the private sector participation banks are or become capital constrained. And the fact is, if you look at the owners of the private sector participation banks in Turkey, you would see that most of them are from the GCC. And because of the volatility in Turkish lira, because of the status of the economy, some of these shareholders might be inclined not to inject the necessary amount of capital that would cater for the association growth scenario. Now, in terms of the overall environment for the Turkish banks, including the participation banks, we think that the operation condition will remain weak. We expect GDP growth to be at around 6%, and some might say this is a great number, but this is mainly a statistical carryover from last year. And we see that the domestic demand is slowing because of the adverse impact of the pandemic and the tighter financial conditions. But at the same time, we see export benefiting from the global economic recovery and also the depreciation of the Turkish lira. Now, coming to banks, we think that lending growth will slow down in 2021 compared with 2020. We put a number of around 15% for 2021 versus 35% in 2020. And the 35% in 2020 was because mainly of the government stimulus. We also think that pockets of risk remain, with asset quality being the most obvious one. We expect NPL ratio to hit 10% of total loans between now and 2022, and we expect that cost of risk will remain high at around 320 basis points. In 2019 and 2020, it averaged 290 basis points. Now, if you compare the participation banks versus the conventional banks, you can see that the cost of risk was slightly lower, but that's mainly because of their strong entrenchment in the SME sector, and because, more importantly, the fact that the SME sector has benefited from government guarantees covering around 18% of the total exposures. The other characteristic of the participation banks is that they would be highly exposed to the real estate sector, and that's more generally because of the principle of Islamic finance that requires an asset to back each and every transaction. And that also would result in sometimes in lower provisioning needs for some asset classes where the real estate collateral is recognized in the calculation of provision. Now, one final word on Turkey, which is a bright side, is when it comes to the sukuk market, because we have observed that sukuk have increased to around $14 billion in 2020 versus $2 billion in 2015. Back to you, Boris.
Thank you a lot. We see that really a lot is happening on Turkish market, Roman, but what we observe in CIS, what are the observations of the rating agencies?
Actually, in the CIS, I think we observe some disconnect between strong interest in the market and Islamic finance overall and relatively modest results to date. Kazakhstan obviously takes the lead, as Mr. Sijini mentioned in his introduction. At the same time, in Kazakhstan, the assets of the two Islamic banks in the country are still a fraction of a percentage point. It still remains very much a niche product. Uzbekistan is trying to embrace the framework for Islamic finance, but I think at this stage the actual products and achievements largely remain in the field of collaboration with international institutions such as ICD. In Russia and other countries, I believe we observe some niche products as well, here and there, where in the regions where Islamic population is prevalent. At the same time, I don't think we observe anything significant, say, on the country scale. So this disconnect, we can attribute to many items, and I guess I would be very much interested in Ali Bek's view on what's happening and Mr. Malaika's view on what's happening. In some cases, this is the legacy of Soviet Union. Modern financial systems started to develop just 30 years ago in most of the countries in the region. In some cases, we are talking about relatively slow progress with legislation, which prevents separate Islamic institutions. But overall the progress was not very pronounced to date.
Thank you a lot, Roman. I think it's really good time to ask Alibek to tell us a bit more on what are the challenges, but also what are the latest achievements in Kazakhstan, and especially in the Astana International Financial Center jurisdiction.
Hello, everyone. Assalamu alaikum. Good afternoon and good morning, everyone. I would like to share some presentation, short presentation. Thank you. Next slide, please. I will just go through the development of Islamic finance in Kazakhstan. So we introduced Islamic finance in Kazakhstan after the global financial crisis of 2007 and 8. In 2009, we introduced a legal framework to open the first full-fledged Islamic retail bank in 2010. It was Al Hilal Bank, UAE Abu Dhabi based subsidiary. 2011, we introduced some adoptions to the legislation to introduce corporate and quasi-sovereign sukuk. Following that year, in 2012, first quasi-sovereign sukuk of Development Bank of Kazakhstan was issued in the amount of $76 million. It was a 5-year MTM program for 500 million, but the only first tranche was issued in Malaysian ringgit. In 2013, Kazakhstan Ijara company was opened. ICD is part as one of the shareholders. 2015, we introduced a number of amendments. So one of the amendments was to introduce legal provisions to allow Ijara companies to operate fully operate in Kazakhstan. And as a result, Al Sakar Finance was first Ijara actually transformed from conventional leasing company. And we also introduced some amendments. Actually, we changed 16 major laws to introduce sovereign sukuk. Zaman Bank also, a number of banks actually, and one of the, along with ICD and Zaman Bank approached us to help to convert Zaman Bank, conventional Zaman Bank to Zaman Bank Islamic, which was successfully done in 1.5 years. And of course, 2015 major milestone was to establish the Astana International Financial Center, which actually triggered the further development of Islamic finance. Could you please go to the next slide? Thanks. So currently we developed a full regulatory framework in the Astana International Financial Center jurisdiction, as well as the roadmap. Islamic Development Bank was involved and helped us a lot to develop master plan, and the Asian Development Bank also provided technical assistance to prepare the regulatory framework. So recently we issued actually cross-listed 3 Islamic Development Bank sukuk, sustainability sukuk, green sukuk, and traditional sukuk, as well as last year we cross-listed Qatar International Islamic Bank sukuk for the amount of $500 million. So in total, over $5 billion was cross-listed to test our exchange infrastructure. So currently we're working with some corporates, and later this year, in a few months, we will issue some social sustainability sukuk probably, and to build some local schools, as there is a great demand, and a construction company. So currently we have over 40 companies now providing Islamic financial services, both as financial companies and ancillary services such as Amani advisors, etc. Could you please, next slide, go. Okay, so we are full members of IOFI, IFSB, and CIBAFI, and we work closely with them in various working groups and technical committee as well. And we provide trainings and human capital development, certified training programs along with NCF and CIS and BF. Could you go next slide, please? Thank you. So these are the framework we adopted recently in the AFC jurisdiction. We introduced Islamic finance rules, banking prudential rules, retakaful prudential rules, and also very important, we introduced tax exemptions for Islamic banking, non-banking institutions, corporate income tax, and VAT. We did it this tax arbitrage on purpose to level the playing field. So in Kazakh, by tax authorities are not tax exempted for everything. Non-banking, for example, financial institutions, they're not benefiting VAT tax, for example, for murabaha transaction, but we exempted them. So we actually on purpose did this to level the playing field. And the master plan recently, of course, last year in December, we published, and it can be shared on the website. Next slide, please. So this is the capital requirement for our Islamic banking and non-banking financial institutions operating in and from AIFC jurisdiction. So we will actually, due to the pandemic, we had to lower the capital requirement 2 times. And for Islamic banks, it was 10 million, now it's $5 million, and non-banking from 100,000 to 500,000, and takaful 5 million, and some asset management companies 500,000 as well. No, of course, capital requirement for branches and rep offices and branches operating as Islamic windows. No capital requirement as well. Next slide, please. So this is the final slide on recent recognition, and the latest was the FinTech Award. I mean, that was published in by Global Islamic FinTech Report by Salam Gates, and we were ranked #1 in CIS region as we developed FinTech Regulatory Sandbox, FinTech Lab, and FinTech Hub, along with the Green Finance Center to develop SRI products and services. Thank you for your attention.
Thank you a lot, Aletbek.
Open to question, no problem.
We see that there is a lot happening in the Kazakhstani market, but we still understand that there are markets with billions of issuers and a lot of transactions, and markets which are at an earlier stage of development. Mohammed, as you worked with most of the markets globally on the Islamic finance field, right? What is the key reason behind the different stages of development? What are the drivers of growth for specific markets, and which are some still at an earlier stage?
Right, thanks, Boris. I think the answer is simple. To grow, the industry needs 2 things. It needs a propitious regulatory environment, #1. And more importantly, it needs to be able to show an economic added value in order to convince people to choose to go Islamic versus conventional. And if I take the example of North Africa, where Islamic finance has been present for many, many years, it has never took off. And if you talk to people there, the answer you get is that Islamic finance is more complex than conventional. Sometimes it's more expensive than the conventional solution. And this is why, and this is something that I noticed from my experience, saying that because there is a large presence of Muslim population, this is a condition that would allow Islamic finance to grow and prosper, is probably a shortcut that we would not take. I think it's necessary, and sometimes not, because if you look at the GCC, for example, majority of the population is reportedly non-Muslim, and still the industry is growing. This is why I think the economic added value is more important than just saying we're going to do the Islamic financial transaction just because it's simply an Islamic financial transaction. And on the Sukuk side, for example, I know several African countries that have looked eagerly at the Sukuk market and wanted to go there to diversify their investor base, to raise funding with investors that they cannot reach otherwise. But still, they did not make it to the finish line because it was far more too complex for them. And the only countries that made it benefited from, in some way or another, from the help of the multilateral institution. Maybe a final word, because we hear that also in many discussions. We continue to hear that sukuk are good for infrastructure financing, and that because in Africa the infrastructure financing gap is huge, then the sukuk will be the panacea. Again, this is a shortcut that we would not take, because the percentage of the sukuk that are really used to finance infrastructure globally is very small. And again, it comes to the complexity of putting together a sukuk. I think Tariq mentioned earlier that for some issuers, the idea is more to leverage an existing infrastructure, raise the money, and then potentially use it in order to do another project. But istisna sukuk, which is again the structure that is available for the infrastructure financing, I personally haven't seen it being used widely in the market.
I mean, I would just to jump in. I mean, I would definitely agree with what Dr. Muhammad just said. And in the end of the day, when you're talking to a sovereign and that wants to issue, it's how much is it going to cost me? How much is it going to cost me to issue? And how much is the coupon rate going to be? If they don't see a added value to that, they're not really going to go for it. So it's trying to get on a pricing side as close as you can to a conventional, and cutting the costs of the issuance, which, as Dr. Muhammad mentioned in his first presentation, maybe the standardization of documentation and so on and so forth will lead to that. Using blockchain technology might also, reduce costs tremendously. So until we're in a place where we are highly competitive compared to the regular or conventional issuance, I don't see why sovereigns would go for it. It's usually to say that, yes, we've tapped the sukuk market. They're even willing to pay that premium just to say that, we've done a sukuk.
May I add, Boris, something? A few years ago, when we adopted major legislation changes to introduce sovereign sukuk, and we calculated, ICD was also involved, pricing for sovereign sukuk was tighter than conventional Eurobonds. And, there is a political will, as Brother Muhammad mentioned, in some North African countries. It's not enough. It's actually also the mid-level regulators and policymakers, their awareness, their understanding of Islamic finance and its benefits to the economy. This is very also the key components to further develop Islamic finance. Because once political will is there, you have to prepare main decision makers, policy makers, and regulators. And that's why the still sovereign sukuk didn't fly, because mid-level was not getting there, because we prepared at National Central Bank. When I was there, we prepared all the work, but they couldn't further take it, and fly. And that was good market-wide. I mean, the pricing was better, tighter, and everything was good. Then pandemic hit. Now it's everything recalculated, and yeah, that's my brief observation.
Alibek, thank you very much for the remark. But maybe then again, question to Tariq: what can multilaterals do to help these markets really fly? Right? Is it more than the technical assistance, support with legislation, regulations, things like that, or is still the role of investor to start the process?
Well, I think it's like a chicken and egg kind of situation, right? So you have two approaches, right? You have an approach where the multilateral might come in and kind of look at the market and say, this is all the legislation that needs to be done. This is what's needed for you to issue a sukuk. Or, for example, what we've done when we did our Senegal sukuk issuance, we just went in and said, okay, we're going to issue it. And we started kind of tackling the issues as they arise and trying to find a solution. Because if you're just going to do it from a kind of a theoretical and not on the ground approach, you're bound to miss something or another. So we've been able to kind of go into certain jurisdictions and do that. One of the challenging things that we do find for sovereigns is the subject of the SPV, right? Does the SPV have to be, an offshore SPV? I mean, look, technically it doesn't have to be, obviously. It's just, are investors comfortable with having a local SPV set up to use it for the sukuk structure? And what is the enforceability of the English law documents of the sukuk transaction within that jurisdiction? So usually what happens is the lawyers would kind of evaluate the local legislation and see how enforceable these documents are in that jurisdiction, and then that would be reflected in the risk factors in the prospectus, depending on how enforceable they are or not.
Does it mean that to some extent we may overestimate the complexity? Because let's say the SPV issue, right? It is the same issue that you have when you issue long participation notes on global markets, which is widespread in the region in Russia, Kazakhstan, and CIS countries, right? So it looks like that the complexity may be a bit overestimated, or...
I would agree with you, but for me, who's used to sukuk, saying to people that it's not complex, kind of might be underestimating certain things, because there is still a bit of a learning curve that occurs. No matter even if the sovereign has issued a conventional, at least they know the process, right? But there is that kind of a bit more complexity on the structure side, and kind of wrapping their head around that.
Yeah, and Boris, if I can jump in here, I think if you compare it with loan participation note, the difference is that under loan participation note, you can create a debt underneath the LPN between the SPV and the entity that is getting the funding at the end of the day. For sukuk, you cannot create such a link. So you're replicated by having an ijara contract where the leasing would underpin the payment of the periodic distribution. You created by having an obligation to buy back the underlying assets at the maturity of the transaction for a price that would be sufficient to pay back the investors. So this is why, if you add all these contracts and if you take all the legal implication of implementing these contracts, sukuk might look much, much more complex. It's definitely much more complex than conventional bonds. It is one notch higher than the LPN in terms of complexity.
Okay.
May I add, Boris, something? Yeah, I agree with Brother Muhammad. When we introduced sovereign sukuk changes, it was a big debate, because before it was actually in the legislation, head lease and sublease. Then we said, okay, we do it a true sale, sukuk al-ijara, classical sukuk. So we have diversified investor base. And that was a real big fight. And then we had to make SPV separate from within Minis, but separate legal entity, and solve the tax issue, double sale with the asset. And then there was, because today, because of its complications, today more sovereigns tend to do sukuk al-wakala, but we did sukuk al-ijara, and then through true sale, asset backed at maturity, and we had to change the currency in hard currency. We also had to introduce in the legislation, because all the transaction between entities and recourse to assets, because it's state property, airports, roads, we had to, because it's sovereign, we had to recourse to sovereign, not the asset itself. So there were plenty, and if it's road goes built in 3 different regions, we had to public registry change in 3 different regions from the center, from the capital city. So a lot small changes and difficulties were introduced as well.
Thank you very much. We had a bunch of questions which may give light on another area, right? Of any important part of any issuance is the view on creditworthiness of what is issued. And we had the question on what we actually rate, issue or issuer, We have a question in the chat on whether sukuk issuance may be used as a collateral for other financial transactions as any other issuance. And I think, Roman, if you could maybe start with our general approach on how we rate sukuks, right? And answer all the other questions.
Right. We definitely assign a rating to the issue, although this rating depends a lot on the creditworthiness of the sponsor. Now, if we are rating a sukuk, what we would typically be doing, and that would be the conditions to equalize the rating on the sukuk with the rating of the sponsor, would be first that contractual payment obligations of the sponsor should be sufficient to fully and timely cover the periodic distributions and payment of principal. They should rank pari passu with other senior obligations of the sponsor. They should be irrevocable. The sponsor should commit to cover all foreseeable costs of the issuer, the SPV, and the risks related to total loss event, the loss of the underlying assets. We should be, typically we should consider it to be remote, and in any case to not create a disruption in those periodic distributions. So if the issue does not meet this criteria, it does not necessarily mean we cannot rate it. It is just that we would have to rate it based on the criteria for the underlying asset class under some form of structured finance criteria. There are other issues as well. There is obviously the creditworthiness of the sponsor. Now, we know that, our approach to this creditworthiness may somewhat differ from regulatory approach. Let's use Kazakhstan as an example. National Bank of Kazakhstan is, I would say, on a more aggressive scale with respect to treatment of assets funded by what you may call equity of investment account holders. They consider this pool of assets to have zero risk weight for capital model purposes. Now, Bahrain, which is somewhere in the middle, would typically say that they would apply a haircut. We think differently. We think that the Islamic financial institutions, in this case banks, they have strong incentives to not distribute losses to those type of accounts. So we think the assets funded by those liabilities, they actually have a non-zero credit risk weight, the credit risk weight we would typically apply to other assets. Now, these nuances, I think they are very important because this creates a lot of asymmetry between how we view the actual risks faced by the issuers and how the authorities and frequently the issuers themselves view those risks.
Thank you very much, Roman. Tariq, in your experience, especially given your role as a sukuk advisor, what are the key obstacles in the course of actions just described by Roman in terms of legislation, barriers, market practices, or things like that in the region, specifically in CIS countries where you consider real sukuk deals?
So I would say, going back to how tax-friendly the legislations are when it comes to the sukuk issuance and the transfer of assets, even though it's not a true sale in some cases, the tax authority would kind of have a double taxation on that side. So I think that's the major point, plus the point that I discussed about the SPV earlier. Location of the SPV and the enforceability of the English law documents within that certain jurisdiction.
Thank you very much. Alibek, in your presentation, you just mentioned that the double taxation issue is largely resolved, right? You have the English law jurisdiction in the Astana International Financial Center. So what are the remaining regulatory obstacles, legal obstacles on the Kazakh market in your view? What is still to be done?
Well, currently, I think the opening correspondent accounts in local banks licensed by Central National Bank. Once we allow full-fledged Islamic conventional bank to open in our jurisdiction, but then we also allow them and benefit all the taxes from all the taxes and English common law legal system to operate in AFC and from AFC. And then we have, of course, we have central bank governor sitting in our board, and then we have 2 regulators signed comprehensive MOU to oversee and regulate institutions operating and vice versa. So I guess current, correspondent accounts currently is a challenge as central bank kind of allowing only for branches, for foreign branches, also under the WTO agreement. So if they branch in AFC, and then they can open. But if it's a standalone new bank, recently we opened actually first fully licensed Al Sakr Bank. I think Brother Tariq knows them well, and Brother Samir, and and I agree with Brother Tariq. We try to solve those issues down the road, because this is untapped market, untapped path. So we're trying to solve and to help them once they go and develop further. So this is the, I think, challenge. But in terms of taxation, yeah, there was a issue for non-banking Islamic financial institutions with the Murabaha transaction, because Murabaha, including commodity Murabaha, was only recognized as a banking transaction. So double VAT was solved only for banking institutions and licensed under central bank. But we solved for everyone. For example, providing Islamic finance, some microfinance organization, we solved this. That was a very big, I think, moment for local.
Thank you a lot.
If I can just add to that also, I think also with some government entities, the learning curve is steeper with others than others, right? So that creates sometimes a bureaucracy within the entities, and trying to communicate and getting all these things resolved sometimes also kind of takes time and lags the whole process.
In our part of the world, Boris, you are from also CIS country, one of CIS countries, and you know that what is not written in the legislation is prohibited. I mean, in a lot of English common law based countries, if it's not prohibited, it's possible, but it has to be written in, for example, under central bank or Ministry of Finance laws and bylaws to be allowed. So that's the main, I think, difference between different legal systems.
Thank you very much. Maybe a related question to most of you that we've got from the audience. How do you see the regulators' appetite to the introduction of Islamic finance standards, and what is the preferred approach? Is it IFSB or is it IFI or mix or anything else?
Maybe if I can type first. No, go ahead, please.
No, please, please.
Yeah, I think standardization, again, is one of the main deterrent of the growth of the industry. It is putting Sukuk at disadvantage compared with conventional bonds, because today it's much more complex, time-consuming, and sometimes expensive to put together a Sukuk versus putting a bond. And that's why, if you recall what happened in 2015 and also in 2020, when oil price went down massively, the oil exporting countries, even though they are core countries to Islamic finance, they rushed to the conventional market. Because when you need $1 billion to pay the salaries, you cannot afford to wait for 3 months until your Sukuk is put together and until it's signed off upon by many stakeholders to be able to tap the market. So what needs to happen is to have standard interpretation of Sharia and standard legal documentation in place, so that the two processes become really equivalent from a time and effort and pricing perspective. someone would say, okay, there are standard setters in the industry, which are the AOE fee, the IFSB. By the way, the IFSB is more like the Basel Committee for Banking Supervision in the conventional world. So they're more into the prudential regulations. The AOE fee is more into the accounting and the Sharia standards, and also the governance standards. But the process of the standardization has to be inclusive. You cannot come up with standards that disrupt the market completely on an overnight basis without proper consultation, without discussing with all the stakeholders, making sure that everything is taken into consideration when you craft the standard, because you end up in situations similar to the one that we're facing in the UAE with the adoption of Standard 59. And maybe I'll stop here.
Okay, Mohammed, it's an intrigue. Maybe if you could remind everyone what actually is happening.
Right. So Standard 59 is the standard on the that governs the trading of debt. Now, after the adoption of the standard, the requirement to maintain a tangibility ratio within the transaction. So basically, that applies to all the transactions where you have two legs, one leg with commodity murabaha and one leg with real assets. Now, the obligation to maintain the 51% tangibility ratio in order for the sukuk to be tradable was on a best effort basis. So at the inception of the transaction, you have the 51%, and then during the lifetime of the transaction, 10 years, 15 years, 30 years, no one checks, it's on a best effort basis. Now, with the adoption of Standard 59, it became an obligation throughout the lifetime of the transaction. So if you have a sukuk that has a maturity of 30 years, each and every point in time within those 30 years, your tangibility ratio has to be respected. And that exposes the investors to three risks. Now, Roman talked about total loss event and how we look at it from the perspective of the rating methodology. Standard 59 exposes the investors to the partial loss event, because what happened if one of your assets is destroyed, okay? And the issuer cannot inject additional asset. What happened? The transaction would not, or the underlying assets would not generate sufficient cash to pay back the investors. And here the question is, are investors protected by other mechanisms like the acceleration in this scenario? Second risk, what happens if one of your assets prepay? And if you as an issuer don't have sufficient unencumbered assets on your balance sheet. Now, the problem is probably not relevant for sovereigns because they can always find one asset somewhere that they could inject in the transaction. It's not for banks because the contribution of sukuk to an Islamic bank balance sheet would be very small. So they can always find an asset that they can plug. The problem would be for corporates. So if a corporate faces a prepayment and has all its other assets tied into other transactions, what do? Your ratio is no longer respected, and your transaction takes the risk of going into troubles. The third risk, which is a risk where the tangibility ratio falls below 33%, then an option is given to the investors to trigger the early dissolution, and your sukuk that was due in 30 years becomes immediately due today. So that creates a liquidity risk for the issuer. So if you were expecting to pay $500 million in 30 years, those $500 million become payable today. If you don't have the cash on your balance sheet, then you obviously default. So this is the issue that Standard 59 is creating for the sukuk market. And broadly speaking, we've seen other standards that could have had a much bigger impact on the sukuk market. One of them is the proposal that was made last year, where the SPV, for example, was proposed to be completely independent. Another proposal was to execute the purchase undertaking of the sukuk using the fair value of the assets. Now here, the issuers of sukuk with real estate assets that were issued in 2012 and 13, when the real estate prices were at the peak, now came the time to repay them, they would be extremely happy because they would be paying maybe a fraction of the amount that they have issued. So that's why I think fundamentally standardization is a must, but it has to be inclusive and it has to take into consideration the requirement of all this.
Thank you very much, Mohammed.
And I think the problem of inclusivity is very challenging because you have within certain Sharia boards you have difference of opinions, difference of views, and so coming up with that is really challenging, and I think it will take some time to actually materialize.
For example, when we were becoming a member of IOFI, National Bank, Central Bank of Kazakhstan, there were concerned departments really worrying about substituting IFRS standards. We say, no, IOFI standards will complement, not substitute. So we had to ease them and explain them.
Okay, thank you very much. Returning back from really global issues to the local markets and the developed regulation there, Roman, we have a question from the audience on the Uzbekistan draft bill. Any comments at this stage on what to expect?
Yeah, well, I guess it will come, but I'll tell you a story. I mean, Uzbekistan made a lot of progress. 8 or 9 years ago, when we were doing an event in Uzbekistan, and we were discussing with one of the senior officials, like which topics we should include, and when I asked about Islamic finance, the answer was like, definitely no. Now we see them embracing the legislation for Islamic finance. So, the progress which took place over those 8 or 9 years is just tremendous. But then, I guess it will come, but the Uzbek authorities have been quite pragmatic. I mean, they didn't rush with the Eurobond issuance until they needed it, and until the development finance was broadly available. As Tariq mentioned earlier, it's all about market conditions. It's all about economic value. It's for the country in this particular case. So it will come. We know that, and I think the track record of persistence is there. So once the authorities say that they decided to proceed with something, that will materialize. But it will materialize when when not because they want to tick the box and say they issue the sukuk. They want to have good pricing. They have to. It has to be cheap. It has to be competitive. So I guess that's our view.
Yeah, I mean, and to add to what Roman just said, I mean, the people at the Ministry of Finance in Uzbekistan know sukuk pretty well. They have people who are very familiar with sukuk. So I think, as he mentioned, if they want to come to market, they want to create a bank when it comes to pricing and really position themselves well in the international sukuk markets.
I think Uzbekistan has clear plans, even though Capital Market Development Authority was closed recently and its functions was transferred to the Ministry of Finance. Also, the presidential decree, I think someone asked a question about the parliament, but the presidential decrees and as a government decrees, they don't go to parliament. They have this in hierarchy of laws as a law, considered as a law and signed by president already. And I think they have, I've read their master plan and plans for this year, and I think it's they're gonna issue some corporate and quasi-sovereign and sovereign sukuk in different and listed on different exchanges.
Okay, so it looks like we have really positive expectations for this market. Before jumping to the last large topic I wish to raise it to the panel, maybe a quick question to Alibek specifically, because we have a question from the attendees on what is happening with Al Rayan Digital Bank. It's your area.
Yeah, just a second. Well, actually, we registered Al Rayan, Masraf Al Rayan subsidiary last year before pandemic hit and lockdown. We actually were in process of licensing a full-fledged subsidiary. Actually digital, they want to do it digital, mobile first bank without even online presence, and fully they wanted to, and we signed MOU And because there is a merger with Al Khaliji Commercial Bank, Al Rayan now merging, and the process is still ongoing, and it will be big full-fledged Islamic bank. And I think this we're expecting big delegation this autumn from Qatar, and then we'll be finalizing things. Yeah. In terms of there is this is my answer, and there is of course great demand and interest in setting up digital presence, digital banks, Islamic banks in a jurisdiction covered Central Asian and CIS.
Rebecca, thank you a lot. It's a great transition to the last topic, because what you say clearly confirms that Islamic finance principles are absolutely compatible with the latest trends in digital, right? You can have a digital Islamic bank and you expect it to work. So it's really great. But Tariq, Mohammed, in your presentations, you raised quite a few parallels between Islamic financing principles and ESG requirements, expectations. So a broad question, to what extent we have an overlap? To what extent the same investor base, you mentioned complexity, which might be an additional constraint, but still, to what extent the really broad ESG investor base may realize that many or majority of Islamic finance instruments might meet the ESG principles, and to what extent this might drive the market in the future? So who would like to start?
I can start. I think at S&P we conducted an interesting exercise where we put the ultimate goal of Sharia on the one side and the principle of ESG on the other side. And again, the ultimate goal of Sharia evolves around the protection of faith, life, mind, wealth, and dignity. And we've seen natural connection between the two. For example, protection of life and environmental and social protection. Another example is protection of wealth and the profit and loss sharing principle of Islamic finance, and the adoption of a stakeholder view in ESG. But more concretely, so for the E, I think energy transition of core countries and the ambition of some core countries to become major producer of electric cars, like Turkey, for example, and green sukuk issuance or green financing, not to mention just the sukuk, green financing, whether with banks, financial institutions, or sukuk issuance. For the S, I think if you look at the industry, you can see some social instruments that could have been easily used to counter the impact of the pandemic. Zakat, Waqf, Qard Hasan, all these are instruments that have been created specifically in order to tackle the social aspects. And in addition to that, we've seen also social sukuk being issued by issuers like Malaysia or the IDB. And the appetite of the market for these instruments was there. And thirdly, the G, I think it's the most obvious one. For Islamic finance and Islamic banks, there is an extra layer of governance, which comes through the Sharia governance, and which was recently reinforced by the AOEF standard on external Sharia audit. So the AOEF just came in with a new standard on external Sharia audit that will come into force, I think, in 2022 or 2023. And we are of the view that this standard could enhance market discipline in a sense that all the findings of the external Sharia audit will now be published and will prompt some reaction from the market and will prompt the market discipline that was so far missing from this additional layer of governance.
Thank you, Lord Mohammed. Tariq, your view?
I mean, I think Dr. Mohammed just covered it, perfectly. Islamic, riba was taking advantage of people, and I think Islamic finance is here to kind of alleviate troubles of not only a society but the world in general. So, looking at renewable energy, social issues, and governance is definitely a key part of Islamic finance, and that's why I believe that the ISDB group has issued, their sustainable sukuk, and they're going towards that. And you could look at social housing, you can look at poverty alleviation, so many things that overlap.
Hello, Roman, maybe if you could remind us of the plans in the region. I recall Uzbekistan government might be considering something like a green sukuk, right?
Yes, this is correct. We saw announcements by the Uzbekistan government that they were considering this. I think the question is, however, broader. I mean, I would say that so far in the region we have seen only a handful of either social issues or green issues, in a sense that would investors in other countries put in this word. And I dare say that, I guess, this again comes to the question of being pragmatic. I mean, if you look at the issuance in the domestic ruble market, I don't think that the rates of the issuance of the most recent ones, like MTS, suggested that there was a materially lower, that the investors were willing to accept materially lower rates. So I think this again, I mean, we know that ESG and is a huge trend, and we know that there are investors who will be happy to accept lower rates, lower periodic distributions if we are talking about sukuk issuance. But at the same time, if you look at domestic markets, we may not be just there yet. Although there are considerable efforts from governments and authorities to promote that in domestic markets as well.
Yeah, just to add to what Roman said, I mean, I think he hit it spot on. The difference in pricing is not that huge, if any. And yes, there are people out there that are looking for this asset class. However, it's not giving that big of a impact. I think a powerhouse like ISDB, when they issue, they can issue at the same as a regular issuance. So they are able to do that. But for the rest of the industry, might be more difficult to do so.
Okay, thank you a lot. And now, kind of a surprise to our panelists, we did not prepare that to discuss in advance. So a real blitz. Maybe one or two things that you'd really like to stress, greatest opportunities and greatest challenges for the Islamic finance market in CIS and Turkey. What is the most important for this year, next year? You have 20 seconds to prepare. I'll use these 20 seconds to remind all our attendees that the recording of the session and the slides will be distributed afterwards. It may take a bit of time for technical issues, but latest tomorrow you'll get all the slides because we again receive requests for those. So, Tariq, would you like to start?
Yeah, sure. I think I would say for the sovereigns to really take that step and play that role and issue, so that the corporates can after kind of follow suit. So that's what I would think would be like really the next step going forward.
Thank you. Alibek.
Yes, I think political will is very important, especially in post-Soviet countries. And what we're doing right now in these hours as well, since March, and we are doing capacity building under the technical assistance of Asian Development Bank, and IFAS from London is educating and raising awareness of our policymaker, mid-level, and regulator. This is very crucial for them to understand, and then it will fly.
Okay, hope regulators are here and listen to us. Roman.
I'll focus on the challenges most. You know, and I think this is something we covered here and there, but did not focus much. I think it's macroeconomic stability. Because when we are talking about, I mean, and the region over the past 6-7 years went through many turbulent periods here and there. Oil prices went down twice. Obviously, COVID last year did not help. And when we are talking about investors' interest, well, investors generally don't like to take excessive risks, especially if we are talking about investors in fixed income-like instruments. So, yeah, so I guess macroeconomic stability would be an important consideration and an important challenge for massive scale, massive scale development of Islamic finance in the countries.
And Mohammed, your turn.
Right. Leverage ESG opportunities. Again, I talked earlier about the Turkey plans in terms of production of electric cars. I talked about the energy transition in the core countries and the GCC. So leverage ESG opportunities. Second, inclusive standardization. What I did not mention is that Dubai is working with partners, including the IDB and others, to come up with a unified global code for Islamic finance. If that were to happen, and depending on the intake of that global unified code, that could resolve the problem of standardization at some stage. And finally, fintech. I think I'm a strong believer that fintech will disrupt the way the industry is operating today, whether on the retail side, which is the low-hanging fruit, or on the wholesale and the capital market activities, which again could happen through higher use of digital sukuk, but that obviously requires a certain number of steps, like the regulatory environment, like the flawlessness of the technology, which is not yet there, but eventually that will happen at some time in the future.
Thank you, Mohammed. So big thank you to all our participants and their active participation in our chat with questions. Really appreciate it. Big thank you to all our esteemed panelists. And now over to Yelena.
Thank you. Thanks very much, our great participants in the panel. Thank you again for your great insights. This brings us to the end of this webinar. We hope that you've enjoyed it and that the sessions have been relevant, insightful, and ultimately valuable for you. The replay of all the sessions will be available tomorrow. On behalf of S&P Global Ratings, the Islamic Cooperation Development for the Private Sector, and the Islamic Development Bank Group Business Forum, I would like to convey a big thank you to all of our fantastic speakers and all of you, our participants, for attending this webinar. As always, please remember to check our websites to stay up to date on our latest news, research, and events. You're also welcome to contact all of our speakers directly should you have any questions, any pending questions, or would like to have further discussions. We also invite you to complete a short survey that will be displayed on your screen shortly. We would really appreciate your feedback on this event. Again, thank you very much for attending. Stay safe. Goodbye.